What is happening, people? Coach Nathan here from Precision Markets, and today I'm going to give you a quick trade recap I took on EURUSD on Friday. So basically with this recap, I kind of want to go over my thought process and why I took the trades. And yeah, I want to make it as close as possible to the moment that I was feeling it when I took the trades. And yeah, so basically we are still stuck in this 4-hour range. Daily is bearish, 4 hours unconfirmed bearish, and the 15-minute is bullish at the moment that I woke up on. And yeah, so the day beforehand, which was a Thursday, we had this impulsive move to the downside, as you can see here. Now this impulsive move was caused by news from what's going on with the Russia-Ukraine crisis. So basically my expectation was that we would come back to at least equilibrium of this impulse move and come into this supply zone. Now on the 4-hour, we did not close below the 4-hour zone, the 4-hour low, and we came as expected into the 4-hour supply and past equilibrium. So at this stage I woke up at about, I believe it was 6:30, 6:45, and we see the price is bullish. It's on its way into the 4-hour supply. So for me, I was looking at this demand zone to take a trade off of. However, we are in 4-hour supply. Everything is basically bearish, so shorts are going to be a lot higher probability than taking longs. However, I had in mind that if we chalk on the 15, which we actually do, if I speed this up, we would see a short trade from this supply zone. What happened here in the 15? The high was taken, the low was taken. We have a supply zone to trade from. However, we do have trendline liquidity here, and we have this demand zone as well. So my idea was to take a trade from this demand zone into supply and then trade it down. And it is a little bit complex. And yeah, so basically I'll come to the 1 minute. I'll give you a look. So we had this trendline liquidity towards the left and this demand zone. So basically what I did was I was just waiting for price to enter my demand zone as it came down to sweep everything. At this very moment we tapped into the zone, and I was waiting for my entry criteria to come into play. So we had a higher time frame mitigation, which is our 50-minute POI. We had either liquidity or inducement to sweep before, during, or after mitigation. We had it before, so that's a check on that. We are in discount of the 15-minute leg. Another check. And now all I got to do is see if I can get an entry criteria, which is a chalk and flip on the 1 minute. So I do. So the low here is taken, which is great. Low is taken, so that's a sweep of liquidity on the bottom, and the high is taken. So this is the first part to our entry criteria. So now that that has been done, in mind I had this zone here. We can see we have a reaction of a supply zone up here. Okay, so we have this reaction. So straight away I'm thinking, what took out the reaction? Well, this candle here took it out. Unfortunately, because of this break was just a wick, and in that moment I wasn't 100% comfortable taking it, and I waited for a little bit more confirmation to see if I could get another bit of an impulse move and maybe get in on the next flip. So price would have tagged me into that one, okay, but I didn't take it. So I see this inside bar happening. I see price starting to move up towards the upside. So I'm like, okay, I'm taking this as my next flip. Price comes in, tags me in straight away. But price started to range for quite a while, and I was in absolute agony thinking, you know what, this trade may not go up. So fortunately for me, we did create some trendline liquidity. Some liquidity above, which could be some sort of equal highs, I guess, smaller trendline liquidity, and we did tap into the 15-minute supply when the 15-minute had chalked in the 4-hour, which is exactly as planned. Now this massive shoot up is definitely a liquidity sweep into the zone. So I had taken a 5-hour trade directly off this, hard TP'd it. So this is something that we teach in Precision Markets, and Rob is very much for taking 5 hours, especially when price is uncertain and price is ranging. Always leave the market with something, pay yourself something. So 5 hours tend to come in super handy. And yeah, so we tapped into this 15-minute supply zone. So instantly I'm like, okay, TP's been taken. I got my 5-or. To me, it actually felt like a lucky 5-or in a way, because we had this range. So it actually benefited me in the end, which is great. So we tapped into the 15-minute supply. So now I'm thinking, okay, it's time to look for an entry criteria to come down, right? So we've tapped in. It's a sign of a reversal. We had a 15-minute chalk. The high is taken. The low is taken. I believe there was another chalk also, maybe on a smaller time frame, maybe on the 13 or the 12. But anyway, this is the structural one here on the 15. So price taps into the 15-minute supply. Same criteria again. Do we have some sort of liquidity to sweep before mitigation of a higher time frame POI? Yes, we do. We've just taken all this liquidity right here. So that's check one. That's great. Are we in premium or discount? We're in premium of the 15-minute leg. Check. Another confluence as well for me. So what's next? Entry criteria and targeting objectives. So straight away, I look for the entry criteria. Now this is a little bit hard to maybe take in because of this quite bullish momentum towards the upside. However, straight away, I'm looking for a sweep of the highs, a sweep of the lows, and some sort of flip. So I get a sweep of the highs here, which is this. And then this is our low here. So what does price do? Price comes down. It tends to range for quite a while. We get a reaction from demand. Price taps into this supply zone here. We do not have a change of character yet until this low is taken. Low is taken. However, I wanted to be extra cautious with this trade and I waited. Now, if I had have taken this trade here, I would have used this zone as my entry zone. However, price tapped into this zone up here, this supply zone. So lucky for me, I wasn't involved in that trade. I wanted to wait for a little bit more confirmation. It's Friday, price is rangy, and I like to be more certain with the zones that I'm taking. Now, this was quite an impulsive move towards the downside. So already I'm thinking, God, you know, it's not going to be a great trade if this comes down any lower, as I don't want to get into discount too quickly when looking for a flip. However, I decided to get in on the next flip that was possible, that seemed somewhat within a reasonable area, which was here. So we have this inside bar, we have this low, inside bar, then the low gets taken. Now I use breaks of structure, wicks of breaks of structure on the 1 minute. So instantly I market execute this, taps me in obviously because I've executed it, and pushes down towards the downside. Now unfortunately with this trade I ended up taking, well fortunately as well, I took 5-or off this trade. Price continued downwards. However, I left my stop loss here because of the momentum and uncertainty in the market. I like to lock in my 5-ors just in case, and price tagged me out at 5-or. I believe this trade continued down quite a bit more, probably down to about 10-or or so, I believe it was. Yeah, so I took 5-or off the table. It continued down to 10-or, but that's okay. I locked in the 5, and that's what trade management is all about, especially in these sort of uncertainty times. So if I go back to the 15-minute, what we can see that happens is we tap into this 15-minute demand, and I actually took a break even. So what I found here was we had these 15 minutes sell to buy wicks, and these can be used as a really good zone as well. And what I decided to do was look for the same entry criteria and get in on a second flip after seeing a reaction, which was this zone right here. However, I was taking out a break even. I brought my stop loss to break even when this low was taken, and it ended up tapping me out of break even. It wasn't the smartest trade in the world. I felt like, you know, this zone could be used to continue further down. You know, liquidity was swept, mitigation of a higher time frame POI, chalk, flip, continuation flip. I decided to take it, said why not. I was already up 10-or on the day, so maximum I had a break even, or I lose 1-or, I'm totally fine with it. And yeah, tapped me out of break even. That's totally fine. It's quite low in this leg. We didn't make a new 15-minute low, but what we start to see to happen here is the 15. It starts to create a change of character again. So this low is taken. this high is taken. So again, we can start to see the price is tending to move towards the upside. We have these big, large bullish candles. So this could have been easily a liquidity sweep from any internal liquidity that was here. And now we're going back externally towards the upside. So we see these big bullish candles. Now I wasn't at the computer at this time. I came back, I think it was around 1 o'clock. I went to train. And this is what we're seeing now. So I mark up a few demand zones here, and I end up taking a long position. I believe it was from this demand zone initially that created the new high. I believe it was also a flip zone too. So let's take a little look. So I had this 15-minute zone marked up, and I looked for the exact same thing again. A sweep of some sort of low, which is here. We have liquidity here, and we've come down, we've swept it. Mitigation of a higher time frame POI. I was creating, I was watching out in case the market was going to create some sort of trendline liquidity below as well. So I had my eye on that just in case price did want to come a little bit lower to sweep this low. However, it didn't. So lucky for me, we got a chalk where the low was taken and the high was taken. Now the only problem with this was I wasn't convinced with this wick down. When this low was taken, I felt like it's just such a small wick. This is quite a large engulfing candle, which is a good thing to see. We do get a reaction. You can actually see that maybe this actually chalked quite early. Let's see. Yeah, no, it chalked on this candle. So we have this bullish momentum, we have a reaction, we have an inside bar, we have a chalk. Now, an order could be placed on this inside bar, which is totally fine. However, I waited for the next flip zone. So today I was just being cautious on the trades that I was taking, and I waited for extra confirmation, and that's really it. So here I got another flip zone. So this trade I took here, we had the high broken with this wick, so I decided to use this bar as my demand zone. Price tapped in after, I believe it was this candle here that tapped me in. Continue toward the upside, and my goal was to take 6 OR from this high, which I marked out, which is a liquidity point in which we could see a pullback. So I just targeted 6 OR. Price continued higher ever so slightly, tagged me out at 6 OR, which is great, and then continued. I think for the rest of the day I was actually quite bullish from this time on. I believe it went up a lot more. So that was my trades done for the day, and that was my thought process behind everything. Now Fridays tend to be quite good days for me in regards to like SMC and supply and demand. I know back in retail days, Fridays were always like a little bit tough to trade. And yeah, so I'm always just being extra cautious anyway on a Friday. Even though their Fridays are really good days, I do like to get in on a second flip. I like some extra confirmation. I like to see the chalks break with maybe a longer wick, maybe some more momentum, especially with this uncertainty that's in the market and everything that's going on in the world. It's always good to be safe and just to take in a little bit of a safer option towards your trades. And it's worked out for me, and I was able to pull out 16 OR and 1 break even. And yeah, that's Friday. So look, nothing special about these trades. What Rob has taught us in the group and what we preach is taking something off the table. So whether it's 4 or 5 or 6 or whatever it is, 5 or tends to be quite a sweet spot. Always paying yourself, right? Because if you're constantly paying yourself, overall you're going to be, consistently paying yourself, you're going to be profitable, right? So why not take something off the table when price is uncertain? There are those days that, yeah, you get the 20 OR trades, the 30 OR trades, and the ones that just keep going, and you can target the 15-minute highs, the 4-hour supplies, the 4-hour legs. But in this sort of time, it's like, we got to pay ourselves, right? We have to take something off the table until the market is able to find direction. And yeah, so that was my thought process behind everything. I was extra careful. I decided to get in on the next flips in these trades. And like I said before, they're not crazy trades. They're not, crazy special trades. I would have loved if I had got a little bit more out of this one. But at the end of the day, I'm happy. 16 OR. it's good to go. So anyway, guys, I hope you enjoyed this video, and I hope you guys like the microphone too. It's a brand new microphone I bought today. Hope it's nice and clear. And yeah, so keep smashing it. We're gonna have a great week this week, and chat to you all in Discord. And feel free to ask me any questions. All right, guys. Chat to you soon.